The world is watching with interest to see what Greece will do next. Will it stay in the euro, or will it be the first country to leave it? But it's clearly not the only Eurozone member whose economic path is uncertain. Spain, with a much larger economy, is suffering too. It's in recession, and the unemployment rate is hovering at just under a quarter of the workforce. And the amount the Spanish government pays to borrow money went up sharply on Thursday.
We need a more expansive monetary policy, with interest rates lower than the current 1%, with the ECB buying bonds, especially from the troubled countries like Spain and Italy, and that would serve as a barrier to stop the crisis from extending and stop the speculation around the breakup of the Eurozone.
But it seems the speculation and deep anxiety about its future is already having an impact on where people want to keep their money. On Thursday, the Spanish government was forced to deny a report that more than $1.2 billion had been withdrawn from the partly nationalised bank, Bankia. In Greece on Monday, around $900 million of cash was withdrawn from the country's banks. Reports suggest in March more than $80 billion was taken out of the Spanish banking system. And it appears there could be a pattern, a flow of funds from southern to northern Europe to countries like Germany and the Netherlands, which are seen as a safer haven for savings.
The financial system is all about trust. And trust is a psychological concept. So, and it's very hard to predict when people lose trust. And when it happens really quickly. So, and this is what we saw in Argentina, for example. When it happened incredibly quickly. So once you see your neighbor queuing at the bank, you queue too. And then it's over, then it's too late. So we have to do everything to avoid that moment that people start queuing at the bank.
Investors then, both big and small, are waiting for a sign that this crisis is moving to the next stage. Emma Hayward, Al Jazeera.